very good evening. You're watching The Money Show on ET now with me, Mubina Kapasi. Here's what we are going to discuss on the show today. If you've been noticing the AMFI data that was released for the month gone by, multi-cap funds, and I guess that comes in as a little unsurprising, have seen the most number of investors redeem or put in the redemption button. Instead, interestingly, we are seeing more investors buy large and mid-cap funds. While, unfortunately, the net outflows, that means there are more people redeeming their equity funds as opposed to investing it, that trend seems to be continuing in the last month. The quantum of redemptions seems to have decreased a tad bit, but SIP contributions continues to stay a little low. So how should you be investing in mutual funds? How should you pick and choose from the umbrella of mutual funds that are available out there? What should you do with your multi-cap funds? We are going to answer all of this on today's episode of The Money Show. And yes, don't forget, we will also be taking on board your questions and queries. So if you'd like to ask us anything, you can shoot us an email on themoneyshow@etnow.tv. All right, well, that's what we have lined up today, and don't forget to write into us. But for now, let me introduce on the show Mr. Hemant Rustagi, of Wiseinvest Advisors. Mr. Rustagi, thank you so much for joining us today on ET Now. So, to start with, this SIP number, it continues to stay a little lower than what we usually see, and this is despite the fact that we saw the markets a little lower in the previous month. Why do you think this SIP number continues to stay low? Is it that investors don't like doing SIPs anymore, or the number of investors rather who like doing SIPs have come down a little?
Well, Mubina, what has happened is, if you really see, most investors who have been following a goal-based process and investing through SIPs have continued their investment through this difficult period. But what has happened is there are another set of investors who either had some financial hardship or were finding it difficult to tackle the volatility in the market. I mean, they were the ones who actually either stopped the SIP or paused the SIP. So clearly what we are seeing now, that, as you mentioned clearly, that the pace with which SIP used to grow has slowed down. Also because the new investors are not very sure, they're not very confident to start SIP at this stage. But like I said, majority of the investors, but that's why you see really the SIP numbers haven't really gone down considerably. Maybe they haven't grown the way they were growing before the pandemic, but clearly most of the investors have realized over a period of time that SIP is one of the best ways for them to kind of tackle volatility and get the best out of equity fund, and they have continued. My belief is that as the markets are improving, as the economy is reopening, I think over the next couple of quarters, we'll see the growth coming back to even SIP number. After all, people have realized that equity is one asset class which will help them build wealth over a period of time. And SIP is the best way to do that. So like I said, I think it's a matter of time where we see the numbers improving again.
Okay, all right. Well, yeah, SIP is the simplest method as well to invest in equity mutual funds. It sort of irons out the volatility that we see in equity markets. Mr. Rustagi, why do you think, in the meanwhile, finally, we are seeing redemption as well starting to ebb off? It's an interesting trend that we've been observing for the last couple of months. When investors saw the market rally, I think that's largely when we saw redemption sort of increasing, in July, in August, etc. But now, last month, there was a little bit of weakness that had creeped into the market, just a little bit, a correction, if you could call it that. And that's why perhaps redemption came down a little and we saw more investments. Do you see this as a sign that mutual fund investors are now trying to time the market? And if yes, why do you think they should not do that?
Well, Mabina, like I mentioned, there are two sets of investors, like I mentioned earlier. Okay, there are those who plan their investment very well into equity, those who follow asset allocation, they're very clear about their time horizon. I mean, they're the ones who actually continue to remain invested in the equity fund. So clearly what happened, the other set of investors who were either not very sure about, their time horizon that they had, or they were not very sure about their asset allocation. And many investors actually had made their equity portfolio very aggressive over the last couple of years by investing a significant amount in mid cap and the small caps. So clearly, when they saw the steep correction after during the COVID-19 effect on the market, when the market started improving, they were not prepared. Because since they were not prepared to hold on for a longer period, they were the ones who started redeeming it. So, and of course, like I mentioned earlier also, that there were some investors who were genuinely facing financial hardship. So there are these two set of investors who were actually exiting from equities. But as the market continued to do well, and as the economy has started reopening, investors have realized that maybe the worst is behind us. And I think all those investors who were panicking have kind of slowed down their redemption. So clearly you're seeing the redemption pressure easing out. And I feel that this is a trend that will continue. I strongly believe that all these investors who are like fence sitters, who are not very sure about whether they should continue investing or not, are the ones who either exited or at this stage have made up their mind to continue. So I definitely see this over a period of time, over the next maybe few months, definitely seeing the redemption pressure easing from these levels.
All right, okay. Now, another phenomena that we are observing is that investors seem to be redeeming multi-cap funds. We've been seeing that for the last couple of, months. Do you think that's largely to do with the whole SEBI regulation bit? And, what's your view on that? I mean, is that a reason why especially long-term investors should be redeeming their multi-cap funds?
Well, I mean, as far as the new regulations for multi-cap funds are concerned, I definitely believe that it's a good step, because look at any other category in equity or hybrid. So there are clear guidelines in terms of how much minimum you need to invest. So now, for example, if you look at large cap fund, the minimum 80% has to be in large cap. If you look at mid cap or small cap, minimum 65% has to be in that segment. Or even for that matter, if you look at large and mid cap funds, at least 35% each has to be there in these segments. Multi-cap fund, the only category where the fund managers had the flexibility to move whichever way they thought that there will be opportunities for them. So clearly what has happened is, over a period of time, most of the multi-cap funds have a very significant exposure to large cap and some exposure to mid cap, but there's hardly any exposure, barring a few that have been true to label, have decent exposure to small cap. Most others do not have anything. While in principle, I agree that there has to be at least, minimum level that every fund manager has to maintain in these three segments. But I strongly believe that 25% exposure to small cap is way too high. Even if you look at the composition of BSE 500, it's only 6.5%, which is there to small cap. And even for that matter, if you analyze the composition of the segment in the small cap fund itself, around 20-30% is in mid cap and some percentage in large cap. So clearly, it's a good thing, but I think what SEBI has put the threshold is way too high for the comfort of investors. I do not, but important thing also I would like to mention that SEBI has clarified that the fund managers don't have to necessarily follow this. If they want, either they can merge these schemes into some other category like large cap, or maybe recategorize them as a large and mid cap or a focus fund, depending on what they are more comfortable with. So I definitely do not see many, barring a few who are already having significant exposure to small cap, there are other fund managers taking it to as high as 25%. My belief is that, if investors have been happy with the performance of multi-cap fund which are there in the portfolio, they should stay put for some more time. The fund manager still have more than 3 months. I think it's a matter of time that they will know exactly what each of the fund manager is planning to do. So I think they should wait for that and then take action. In any case, most of these guys have a very high exposure to large cap, which I think suits a long-term investor. So I don't really see any reason for them to panic or make any hasty decision. So clearly they should wait out for some time, and I think which will be good for them. Then they'll have a clarity in terms of which way they need to go.
Just wait by with your multi-cap funds, especially if you're long-term investors. Wait for any communication as well from your fund manager. I'm sure they'll be getting in touch with you very soon, if they haven't already, of course, and I'm sure many of them may have gotten in touch with you about what they are doing with the multi-cap fund. Are they reclassifying it, or will they sort of be making changes in the fund to adhere to this new SEBI regulation? And yeah, like Mr. Rustagi mentioned, most of these multi-cap funds have got more of salience towards large cap stocks. And, Mr. Rustagi, would that explain the reason why maybe we are seeing more inflows into large and mid-cap funds, that perhaps multi-cap fund holders are saying that, look, I'm going to exit my multi-cap fund and I'll move to a large and mid-cap fund? Do you think that could explain this inflow into specifically the large and mid-cap fund category, not even the large cap fund category?
No, Meera, you're right. I mean, the numbers show that, there have been net outflow from, multi-cap funds. But the issue, I'm not very sure whether that money they're doing it necessarily so that they want to put money in large and mid-cap. Yes, I mean, the large and mid-cap category has been getting, net inflows, which is what has happened in the month of September also. But that's primarily because, the mid-cap as a segment has done better than large cap. If you see the last 6 month performance, I mean, the mid-cap and small caps have done better than the large cap. In fact, if you see the data for the last month for September, the money there's a net outflow even from the large cap fund. So it's not that, that investors are exiting only from the multi-cap funds. So clearly, yes, they are exiting. Maybe some who are not very sure about what the fund managers are going to do, maybe they have taken out money. But I believe otherwise it's genuine redemption. It's not necessary that is moving into a large and mid, because there are two categories where the net inflow is there, large and mid and the focus fund. Now, if you see, most of the focus fund also have a bias towards the large cap. The only thing is because the markets have become very stock specific. So those funds that have a focus portfolio have done better than the well-diversified portfolios. But that's one of the reasons I think why the money is going. The fresh allocations are actually moving into those two categories, not necessarily that people are taking out money from multi-cap and putting it there.